Imagine a scenario where the world's second largest economy is struggling to keep its head above water, with deflation fears looming large. This is the stark reality facing China, where the latest economic data has sent shockwaves through the financial markets. But here's where it gets really interesting. The country's factory gate prices have fallen more than expected in July, while consumer prices have remained flat, sparking concerns that weak domestic demand and trade uncertainty are continuing to weigh heavily on the economy. The data, released over the weekend, reveals that China's consumer price inflation is flat year-over-year, but higher than expected month-over-month. To break it down further, consumer prices were unchanged from a year earlier, versus June's 0.1% rise, and beating expectations for a 0.1% decline. Core CPI rose 0.8% year-over-year, the highest in 17 months, driven by non-food items, while food prices fell 1.6%. On a monthly basis, CPI rose 0.4%, reversing June's 0.1% drop. Now let's dive into the Producer Price Index, PPI, which dropped 3.6% year-over-year, matching June's near two-year low and missing forecasts for a smaller 3.3% decline. This marked the 25th consecutive month of PPI contraction, reflecting ongoing price competition and overcapacity in key industries. On a monthly basis, PPI fell 0.2%, an improvement from June's 0.4% drop. But here's the thing. Authorities have launched measures to curb disorderly competition in sectors like autos, which some analysts expect could start lifting PPI from August. And this is the part most people miss. Extreme weather conditions, including heat waves along the eastern seaboard and heavy rains in other regions, have added to the economic pressures. While some see signs that deflationary pressures may be easing, others caution that without stronger demand-side stimulus, recovery may be limited. A prolonged housing slump, fragile U.S. trade ties, and a weak labor market remain key headwinds. So, what does this mean for the future of China's economy? Will the government's measures be enough to stimulate growth? Or will the country continue to struggle with deflation? But here's where it gets controversial. Some experts argue that China's economic woes are a result of its own making, while others blame external factors like the trade war with the U.S. And this is the question on everyone's mind. What will happen next? Will China be able to turn its economy around, or will it continue to struggle with deflation? We want to hear from you. Do you think China's economy will recover, or will it continue to face challenges? Share your thoughts in the comments below.